All right, one of my channel members asked me to do a video comparing Nvidia stock to Qualcomm stock and answer which one I think is the better buy. So thank you for that request. And that's what I'll do in this video. I'll compare Nvidia and Qualcomm on several critical financial metrics, including revenue growth, cash flow from operations, operating margin, return on invested capital. And then finally, I'll compare them on valuation on both the forward price to earnings multiple and on the discounted cash flow valuation approaches for each Nvidia and Qualcomm. I'll do all of that in this brief video, so let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, let's start with revenue growth for these semiconductor design companies. Qualcomm demonstrated 19% revenue growth in the latest quarter, while Nvidia delivered a whopping 93.6% revenue growth. However, the big difference on the revenue growth number is very partially, offset by the trend line difference. Nvidia has experienced decelerating revenue growth for 3 consecutive quarters now, while Qualcomm is accelerating revenue growth. You can see Qualcomm's revenue growth is increasing here, while Nvidia's revenue growth is declining here. And that trend is likely to continue for, I would say, at least 1 or 2 more quarters, because Nvidia is comparing its revenue right now with phenomenal growth figures from last year. So the comparisons are very difficult for Nvidia, and Qualcomm is the opposite. It's comparing against quarter revenue numbers last year that were actually decreasing year over year. So the comparisons are much more favorable for Qualcomm, while the comparisons are much more difficult for Nvidia. Nevertheless, they are both expected to grow revenue nicely over these next several quarters, most significantly because of the rising demand for artificial intelligence. Qualcomm and Nvidia are benefiting from that trend. Nvidia, of course, more so than Qualcomm. The next factor I wanted to compare these two on is cash flow from operations to sales. And in this metric, Nvidia has both the better number and the better trend. At 52%, Nvidia's CFO to sales is much better than Qualcomm's 31%, and Nvidia is still improving this metric while Qualcomm is decreasing in this regard. That being said, the 52% number and 31% number are both excellent numbers in terms of cash flow from operations to sales, and I suspect that Nvidia's cash flow from operations to sales will not persist very much longer growing. If anything, I think it'll settle down here around these levels. Very difficult for Nvidia to generate higher CFO to sales numbers, but given their continued revenue growth and high margin revenue growth, right? They're selling their products at premium prices, and that's going to persist because they are sold out for all of next year. And so that will likely continue, but the rates of increase will likely settle down. Nvidia already said for the next 1 or 2 quarters, it's going to be challenging because it's ramping up the newest generation technology, and the initial stages of that ramp up are not as profitable as when they reach larger scale. Qualcomm, meanwhile, 31%, not bad news at all. However, we just got some data from Micron Technology this afternoon that suggested the smartphone market was challenged in the latest quarter and is expected to be challenged over the next quarter as well. And that's a category Qualcomm operates in. Also, Qualcomm trying to penetrate the personal computing market. Micron Technology also signaled that market is a bit slower to recover than anticipated. The operating profit margin is a similar story, with Nvidia beating Qualcomm and the improvement also favoring Nvidia at 63% operating margin. It's one of the best operating margins of any company that I follow. The only one that I know of that's better than Nvidia in this metric of all of the companies I follow, and I follow over 100 companies, is Visa. Visa is the only company that I know of that I follow that has a better operating margin than Nvidia here at 62%. The big difference being that Visa has managed that elevated operating margin for the better part of this last decade. It's been over 60%, while Nvidia only recently surpass that level. And I'm not as confident in NVIDIA's ability to maintain this margin as I am in Visa's ability to maintain that margin. But I'm not comparing NVIDIA to Visa here in this video. I'm comparing NVIDIA to Qualcomm, and Qualcomm's operating margin is at 26%. Qualcomm's operating margins likely to increase over the next several quarters, again, because it's recovering from last year where revenue growth were decreasing year over year. Now revenue growth is increasing again. And so the company's better able to reach those economies in scale compared to last year where its revenues were not at as large a level as they will be this year and over the next upcoming 4 to 12 quarters. Return on invested capital tells us more of the same with NVIDIA's excellent performance in this regard. 107% is remarkable. I don't think sustainable, but remarkable as long as it can last. I suspect NVIDIA's return on invested capital will drop below 100% over the next 4 quarters, if not sooner. While Qualcomm's return on invested capital, I suspect, will increase for the same factors I highlighted before with the rising economies in scale for this company. All right, now that we looked at the characteristics, the financial metrics, let's look at valuation. And not surprisingly, NVIDIA is trading at a more expensive price than Qualcomm when measured on a forward PE, because NVIDIA's performance, we noticed, was so much better in every metric we looked at, whether it was revenue growth, cash flow from operations, operating margin, or return on invested capital. And I could have probably shared with you 10 other metrics where NVIDIA is surpassing Qualcomm significantly. Qualcomm, not a poor company, not at all. It's just when you compare almost any company with NVIDIA, it makes it look really bad. It's just how good NVIDIA is. Qualcomm's trading at a forward PE of 12.45, less than half the valuation of NVIDIA. But that's just one way to look at it. Another way to look at valuation is through a discounted cash flow approach. And this calculation even shows more of an undervaluation for NVIDIA. Its current market price is $129, while my intrinsic value calculation is $314 per share. Now, I did this calculation on November 11th, 2024. I wouldn't be surprised if I did an updated calculation. The intrinsic value was lower than where it is right now in this calculation. In fact, I might do an updated calculation of NVIDIA stock on a discounted cash flow basis in the next week or two to see how the valuation has changed since November 11th. The same discounted cash flow valuation I did for Qualcomm on December 18th, 2024, and this found the intrinsic value per share at $200 compared to the current market price of $153. So for both Qualcomm and NVIDIA, I get results that demonstrate to me that they're both undervalued. And in fact, I have both of these stocks rated as a buy. I like both of these stocks as an investment. But if I had to choose only one, which one would I choose? I would choose NVIDIA as the better stock to buy. I believe NVIDIA has earned that premium valuation over Qualcomm when measuring on a forward PE basis. And I like the fact that NVIDIA's products are sold out for at least another year. And then it has the generation after that, the Rubin technology, already lined up. So I still like NVIDIA's prospects over Qualcomm right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.